does the amplitude or magnitude of negative rates matter? And is this just almost a market tactical function of the United Kingdom, or is this a path to a greater negative rate like what we see in Germany and Switzerland?
So I think the magnitude is something to focus on, and also the duration. So if you're talking mildly negative, let's just say, negative 10 basis points or so, and you're looking for a period that's not too long, I mean, we're talking, not more than like a year, then I think that's, very different than what you're talking about as far as like the structural changes that could come about. But I think the key issue is, do you begin to see real questions on how this could really impact the outlook for the banking sector? And so if it's mildly negative and it's not that long a duration, and you really believe that this is, an economic crisis which is, short term, that we see the path out of it, that it will be something where, it's a quick shock down, but it's also a quick bounce up. And that's what the market is really debating right now.
What's so important here, Joyce Chang, and I'm going to use one of your members in Research Crime, Dr. Folkers Landau over at Deutsche Bank, and you know how upset David is about the pernicious negative rates of his Germany and the continent as well. London is different. New York is different. Are negative rates in the United Kingdom with a more money market, a more financial economy, is that a sharp distinction from what you see on the continent, which is less financial, more commercial bank driven?
Well, I think that is a big distinction. And, when we just look at the numbers for just, the role of the financial sector, as a percentage of the GDP in the UK, that's the difference. So the question is this sort of something that is more exceptional, and it's going to be mild, and it's going to be short-lived because, we see our way out of this crisis in the second half of the year? Or is this something that becomes a much longer-term policy, just as we saw during the Eurozone crisis, just everything sort of got extended into a longer-term strategy? Now, the market hasn't, decided on that yet, but there's a lot of risk, in the UK, just because it's a time where there's a lot of challenges in the second half of the year, related to Brexit. And, our analyst, Malcolm Barr, took up the, chance of no deal up to 35% if there's no extension on this. So could you see also that, the combination of, the fallout from the COVID-19, Brexit discussions, the negative yield policy, that this becomes something that becomes much more of a vicious cycle. But I think right now what everybody will focus on is the magnitude, as you mentioned, and also the duration.